Luca, what do you think? Is it time to make the move now? If people are making the move now, are they too late?
Well, I think we have to distinguish between valuation, and I think the observations that a number of investors have made about very tight spreads and valuations that are perhaps a little bit unattractive is correct. But you have to distinguish between that and timing. Clearly, we are in an environment of financial repression by the central banks. It's a very different kind of environment from what we've grown up with over the last 20 years, and I think it's very difficult to say that we should be at valuations that are similar to what we'd seen in the past. It's a little bit as if, imagine the central banks were putting $500 billion a year in stocks and buying all the stock markets in the world directly. Should we have the same PE ratios when they didn't do that?
But we're in agreement that valuations are getting very stretched now, right?
Well, I think there are lots of indicators of stretched valuations, certainly in the credit market. Some people would say even in the sovereign spread markets, although I would disagree on that point. And of course, you've seen some of the fairly worried reports from the BIS regarding the impact that central banks are having on financial markets.
How violent could things get when central banks really do start moving?
If you posit a typical normalization process in monetary policy, like the ones we used to have in the early noughties and the early 1990s and so forth, it clearly would be extremely negative for any kind of credit product and really for all bonds. And I think that's what people are worried about. We saw some of that market action in the middle of last year when people started worrying about the taper and how quickly even treasuries sold off and obviously everything else, and spreads were widening in the credit world. But the big question is, will the central banks normalize policy at that pace? I think there's a lot of reasons to think that they will not.
I want to go back to what you said on sovereign spread markets, that you don't agree that they're overstretched. What in particular is good value for you still?
Well, I think within Europe, spreads can still compress quite a bit. There is a very nonlinear relationship between what people might call fundamentals and sovereign spreads. And that nonlinearity, that explosive momentum, is given by expectations, but of course also by the policy background. The policy background has evolved tremendously in Europe. We have OMT, we have an ECB that's joining the other central banks in financial repression. And in that context, I think spreads can tighten quite a bit more.